Good evening. Welcome to STC's educational webinar entitled Choosing Your Self-Directed Custodian or Administrator. Thank you for joining me this evening. I'm Jackie Knight. I'm the Corporate Training Director for STC, and I'm very glad to have you here with me. I do want to give just a bit of information before I start into the content of the webinar. I do want to explain to you that STC is a retirement plan administrator only, so we do not provide legal, tax, or investment advice. We also don't represent or sell securities or investments of any kind. We are not a registered investment advisor, and we don't represent or endorse any particular investment opportunities. And I may talk about some during this presentation, but again, we do not sell or endorse any particular investment. We do recommend that you consult with your legal, tax, and investment advisors prior to making any investments. Now, this evening's webinar is a little bit different than most of our webinars in that I am going to focus on the questions that you can ask different companies in the self-directed marketplace in order to determine what company would be a good fit for you to work with. So we're going to talk about making comparisons between companies, investment options, account structure, how different companies might structure your account, partnering funding sources, administrative functions that must be fulfilled for all retirement accounts, transaction guidance, transaction processing, company credibility, and account costs. So hopefully this will give you a good start to really thinking about what you need in order to self-direct your retirement account and what type of company you want to work with. So when you are comparing companies, you do want to determine if you are comparing like companies, apples to apples, or companies that are very different from each other, apples to oranges. So let me tell you a little bit about some of the different types of entities that are in the self-directed industry, give you some general information about them, what they may offer, what specifics might relate to their particular type of entity. So what is in a name? There are entities that are custodians. Now, custodians must hold the assets for retirement accounts. Custodians are regulated. They're regulated by different organizations depending on what type of custodian they are. They could be regulated by the IRS, the SEC, a state banking commissioner, comptroller of the currency, FDIC. It just depends on what type of custodian they are. Because they are regulated, they are required to comply with the rules of their governing authority. So because of that compliance requirement, they may have developed specific internal policies and procedures for processing your investment transactions. And depending on the complexity or the creativity of your transaction, the time frame for approval of your transaction and processing it can be lengthy or uncertain. It really is dependent on the type of transaction and what kind of an approval process it has to go through. There are also in some cases with custodians, they may have some restrictions on how clients use their money. In investments, they may not permit using leverage. I'll talk a little bit more about using leverage for a real estate transaction. They also may not permit partnering with other funding sources. So those are some things that you would want to find out if you were looking at a custodial institution. Administrators. Generally, administrators set up your self-directed account and they handle all the paperwork and the maintenance of the account. They file all the necessary reports with the IRS or whomever, and they do all the paperwork function. Now, STC is a full-service administrator. We do work in conjunction with a custodian. We have a custodial relationship with a particular firm, and so they hold the assets and we administer your account. There are also companies that call themselves facilitators. In general, facilitators offer consulting services. They might offer some investment advice. Some may create an LLC for their clients and offer assistance in structuring transactions. Facilitators can be very undefined. So if you're talking with a company that labels themselves as a facilitator, you definitely want to find out what services they offer. There are also companies that are strictly set-up companies. They may just set up the self-directed account structure. It could be with or without an investing LLC. Excuse me. Generally, they offer no administrative services or no maintenance services. So in that case, you would have to fulfill those responsibilities yourself. The bottom line in this scenario is you really, regardless of what a company calls themselves, you need to check into what services they offer. Ask specific questions. That's partly why I designed this webinar for you, so you have a list of questions you can ask them and find out what particular services they offer, and then what is their accessibility beyond that initial account setup. What are they going to offer you after you have your account set up and funded? So those are just some basic information about the different types of companies. Now, another question you will probably want to ask is, does the company permit all allowable asset types? Can you invest in anything that is permissible by law? So I've brought out onto your screen now a lot of different types of real estate investments: single or multifamily homes, vacation investment property, tax liens, raw land building lots, commercial buildings, real estate syndications where you partner with other investors and form a syndicate to invest in a real estate investment, mortgages, loans, and notes, precious metals. Do they permit you to invest in precious metals? Can you participate in a business ownership? Can you invest in foreign currency, the Forex market, options, futures, commodities, stocks, bonds, and mutual funds? All of these different types of assets are permitted in a self-directed account. If you are looking at different particular types of assets, you will want to definitely ask if the company that you're looking at working with does permit you to own that type of asset in an account with them. With STC, we allow all permissible investment holdings, so none of these would be off the table with STC. You could invest in any of them. Another question you will want to ask is, pardon me, go back a slide. Does the company allow you to leverage an asset's purchase? In other words, will they let your retirement account get a loan, borrow money in order to purchase a real estate investment? Some companies do not permit this. Others do. STC does. Now, I will mention that you must always, when it's a retirement account leveraging an asset, you must always use a non-recourse loan. And that's required because of the IRS rules that relate to retirement accounts, a non-recourse loan. I'm not going to go into a lot of detail about what that is. I do have another webinar that was previously recorded on our website that you can listen to and learn more about non-recourse loans. But I'll just mention that in general, they mean that the lender only has recourse to the property that the loan is on if there's a default. In other words, if you hold this asset in your retirement account and you default on it, your retirement account defaults on it, the lender can only go after the property that the loan is on, not other assets held in your retirement account, not you personally. They have no other recourse. So it must be a non-recourse loan. But we certainly have folks who do use leverage to purchase real estate investments, and we do permit that within an STC account. Now, you will probably also want to ask, what type of account structure are they going to create for you? Custodial accounts usually will be entitled something like account number 12345 for the benefit of Joe Andrew Smith. So they will have that type of a name, and it will be a custodial account. Now, you may want to ask if the company will create an LLC for your retirement account. And the reason that you may be interested in that is that there are a number of benefits to an LLC in your retirement account. STC does create an LLC investing vehicle for each client's retirement account. So let me tell you what those benefits are, because these are the reasons that we use this type of a setup. With an LLC structure, you have maximum flexibility in structuring transactions. So let's say you're doing a very complex transaction. Let's say it involves leverage. You're going to get a loan for a real estate purchase. And not only that, but you're going to have multiple parties to that loan. So your retirement account is not going to be the only owner. And in addition, of these several owners, one of the owners is actually going to be working on the property. Maybe they're going to be rehabbing it for you. So that offers another level of complexity. With an LLC structure, you can lay out those types of things and really be able to control how that structure works. So an LLC gives you a lot of flexibility. It does provide an additional layer of asset protection because it is a limited liability company, but it is a very specialized one. It's not a generic business LLC. Rather, it is an LLC whose articles of organization and incorporation documents are actually laid out so that they comply with the rules related to retirement accounts. So it is a very specific LLC designed to be owned by a retirement account. So it's not a generic LLC. This structure also offers you checkbook control over your retirement funds. So that means you have immediate response to investment opportunities. We know that good investments can come and go very quickly, so you need to be able to move on them. Now, with our structure, we do not give our client the checkbook for their retirement account. There are some companies that do that. We do not, and we do that really for your protection. There are a number of different types of transactions that are prohibited by law, and should you violate those rules, the IRS has penalties for doing that, and they can be severe depending on what you do. So rather than put you in a potentially precarious position of having your checkbook and just being able to write a check for anything, what we do is we have you send the paperwork to us, we review it immediately, and then we can same day or next business day, depending on the time of day that we receive those documents, we can fund that transaction for you. But what you have are our experts looking over that transaction and making sure that it doesn't violate any of the rules, disqualified persons or prohibited transaction rules. So it's really, I call it protected checkbook control. You have our protection of reviewing your transaction, but immediate response to the investment. Using this LLC structure does also simplify asset titling. The title on your assets is going to be in the LLC's name. So that means if you purchase a piece of real estate, it would be entitled in Sun Retirement Investments LLC. And so when you transfer title, it would be very simple and straightforward to transfer the title of that asset. Using this structure also eases pooling. And by pooling, I mean partnering with other funding sources to co-own an investment. Many times we have clients who are interested in participating in an investment, but they have insufficient funds to wholly own the investment, or they don't want to invest a large dollar amount. They want to invest only a portion of their retirement account. And so that means that they would like to partner or pool with other funding sources. You can do that in a very straightforward fashion when you have this LLC structure. So let me talk just a little bit more about partnering or pooling. You'll want to ask whomever you are talking with if you can co-invest your retirement funds with other funding sources. STC, absolutely, you can. You can invest with colleagues. Let's say you're a real estate investor. You go to real estate investing meetings. You meet other investors. You find a group who are interested in doing an investment together. Your retirement account could invest with them. LLCs, you could invest with LLCs, investment syndications, and personal funds, your spouse and family members. Using our LLC, you can co-invest with them as well. Now, normally, you personally, your spouse, and certain family members are disqualified persons to your retirement account. But when you use our structure, you can co-invest with those otherwise disqualified parties at the inception of a transaction. And I show this on this schematic in investment number 3. Here you see investment number 3 has 4 co-owners: your retirement account, your father, your daughter, and then some of your personal investment money outside of your retirement account. This type of partnership is permitted as long as you co-invest at the inception of a transaction. So we have many folks come to us who have some personal money and some retirement account money that they want to invest in a project. Or 2 spouses, a wife's retirement account, a husband's retirement account, want to co-invest. You can do that, and it's straightforward when you have this LLC structure. While I'm on the schematic, I'll just define how our setup process works. Here you see on the upper left the current custodian. So this would be where your account is currently held, and you would fill out documents that would direct your current custodian to transfer or roll over funds to our custodian. We would create this LLC for your retirement account in the state of your choice. Then the funds would move from the custodian to a bank account that your LLC has access to. And at that point, you would be ready to begin investing. So that's how our setup structure works. Now, you will also want to ask prospective companies what administrative functions they fulfill. Do they fulfill all of them, all of the requirements for the account, and file all the reports? Every year, an annual valuation is required. An annual report must be sent to the IRS. You must maintain books and records of all the assets and all the transactions related to each asset. Depending on what you own and where you own it, you may have some state filings that are required. So, Security Trust Company is a full-service administrator. We fulfill all of these functions. We also will see to it that you have quarterly financial statements. You will have online access to them. You have access to a cash flow statement that is updated daily, so that you can really keep track of your investments. Let's say you have a rental property in your retirement account and you're getting checks through your property manager. You can go online and see if that check has been deposited for this month from your renter to your retirement account. So we do fulfill all of the administrative functions for your account. Transaction structure guidance. First, you want to ask yourself if you are well versed in the IRS and the ERISA regulations that relate to retirement accounts. There are some things that you cannot do, as I mentioned earlier. There are some assets that are not permitted. So is this an allowable asset or not? Assets that are not permitted happen to be life insurance contracts and collectibles. Okay, so what are the definition of collectibles? Do you know that? Do you know what transactions are prohibited? There are some things that you cannot do in a retirement account. Do you know who disqualified parties are? There are some people that your retirement account cannot do a direct transaction with. So you want to know, do I know enough, or will the company educate me on all of these things? Will they look at my transaction and ask me questions? Are you related to this party? How is this leverage going to be provided? Where is the down payment coming from for this real estate property? So we will do that. We will ask you those questions. We do not expect our clients to be experts. That's our job. So we will educate you, and there's no cost for talking to our folks at our client services department as much as you need to, as often as you need to. So we will do one-on-one calls, whatever is necessary to help you understand what is permitted and what is not permitted. You also want to find out if the company that you are looking at has experts that will review your transactions for compliance and adherence to these rules. We do. That is pretty much, this is all that we do. STC is strictly a self-directed retirement account administrator. So our whole function is servicing our client accounts. So we do have the experts, and that's what they do all day long, is review your transactions and talk with you and educate you. You want to find out if the company offers assistance in structuring complex or unusual transactions. Let's say you've got multiple parties and you need to find out, they're going to have different percentages of ownership. How do you structure that transaction in your retirement account? We can offer you that. Does the company have experts available to talk with your advisors regarding transactions? Let's say your tax accountant doesn't really understand what you are doing in your retirement account and has some questions about, is this possibly going to trigger a taxable transaction? Our experts will be happy to talk with your tax accountant if you need that. So that's just part of the service that we offer. There's no additional charge for that. That's included. So we do have those experts, and they are available to your advisors. Transaction processing. How is your transaction process? What is the transaction approval process? Is your transaction reviewed and approved within 24 hours? With STC, it is absolutely. You can fax or email your transactions to us, and they are reviewed same day or next business day. Is the review approval time frame dependent on the complexity of the transaction? Now, with some types of entities, that process can take a while. Let's say you are going to do a real estate investment and you're working with a custodian, and the custodian requires you to mail hard copies of all of the closing documents to their office, and then someone there must review them and sign off on behalf of your retirement account. That can significantly increase the time frame for approval of that transaction. So you'll want to find out, how they operate in approval. What is that turnaround time to fund your investment? In real estate transactions, who signs the transaction documents, the account holder or the custodian? So with STC, our transaction approval process is very straightforward. We do recommend that you call and review your transaction in advance so that we can talk with you about it, make sure that your documents are titled properly, make sure that you're not engaging in any of those prohibited transactions, you haven't involved any disqualified persons. And when you send the documents to us, we review them immediately. If there are no violations of IRS rules, and we have those documents by 2 p.m. Eastern time, then we can same day fund that transaction for you. If it's after 2 p.m., then it will be next business day. And that's simply because of the banking cutoff requirement. So the turnaround time to fund your investment is either same day or next business day. And in real estate transactions, you do not need to send the documents to us. Rather, you can go to the closing on behalf of your retirement account, and you can sign the documents for your retirement account. You are the co-manager of that investing LLC. You are the investment manager, so you will actually be signing for your retirement account investment. So that's how STC would operate. Now, we're talking about your retirement assets, your retirement investments. So you do want to consider the reputation of the company and how safe your assets are with them. So you'll want to check into the company credibility. Can you get client testimonials? Is the company insured? Are your funds held in a commercial bank? You know, where are your funds? I talked with one individual who had an account with another organization, but he did not know where his money was, and he couldn't find out where his money was, which was very disconcerting for him. So let me just tell you a little bit about STC. As I said earlier, self-directed retirement accounts are all we do. We have been in business since 2004. Our principal has extensive experience self-directing his own retirement account. We have expert attorneys and accountants on staff. We've had no Better Business Bureau complaints, no lawsuits. We do work with a custodian in Onega, Kansas, and their name is Main Star Trust, so you can check them out. Your cash funds are held in a bank in Hagerstown, Maryland. That's where we are headquartered, Hagerstown, Maryland, and the name of the bank is Middletown Valley Bank, so that is where your retirement funds are. We do have insurance for errors and omissions, so you can check us out, and on our website we have a link to client testimonials, so you can see names and what the people thought specifically about working with us. So you will definitely want to check out those kinds of things with the companies that you're considering working with. And then you'll also want to consider account costs. What are the expenses associated with the account? And you're going to want to consider not just the cost, but the quality and the quantity of the services that you're getting for what you're paying. Now, I've checked into lots of different companies, and many of them have a page or two listing all of the different fees that they charge depending on what you're doing and how often you do it. So you will want to find out if there are individual transaction fees. What are the various transaction fees? Are there custodial fees? Are you charged consulting hourly fees to talk with them, to consult with them about structuring your transaction, or I'm asking, you know, is this a prohibited transaction? Are there fees to open or close the account? What are the administrative or management fees? And what other costs are associated with the account? And then probably the bottom line is, what is the cost estimate for your account and the transactions that you anticipate? So with STC, we do not have individual transaction fees, no custodial fees, no fees to do Roth conversions, no fees for consulting or asking questions, no fees for consolidating multiple accounts, no additional fees. What we do have is an initial one-time setup fee. That is generally $2,000 for that one-time setup. That covers the cost of the transfer of the assets, the creation of the LLC, all of the initial work. Now, I will mention that right now we are offering a discounted setup fee. We're offering it for $1,000 for an account. So if you are interested, this is a good time to talk with us. That is a limited time offer. It currently does not have an end date, but I don't expect that it will last indefinitely. So please do, talk to us if you are interested in that. Then beyond that initial setup fee, we charge a wrapped management fee, so it covers everything. And that wrapped management fee is less than 1/4%. No, it is 1/4% per quarter. It's 0.245% per quarter, so less than 1% a year. Now, if any of you are interested, I can send you our client fee sheet. as an attachment to an email. So just write that out in your little question box or send me an email after the fact. So we do not do various transaction fees. We do a wrapped management fee, and that is, covers all of these things that I just mentioned. So that is basically, those are a number of questions that I think you can use to kind of do your due diligence in discerning what company you want to work with. So now I would ask you, how can we serve you? Perhaps you know that you want to open a self-directed account and you're ready to do that now. Perhaps you have clients or colleagues who might be interested in self-direction, or you simply need more information. In any of those cases, please do get in touch with us. You can contact me directly. My email address and my direct phone are on our website, jknight@stcira.com. You can visit our website at stcira.com and get more information, and there is our corporate number on the screen. So please do consider getting in touch with us and letting us know how we can better serve you and what you might need to know, or if you are ready to open an account. Now I'm going to take just the next 10 minutes or so and answer some questions. I got a few in advance of our webinar, and I see a couple here in the question box. So please do, if you have a question, go ahead and type that in the question box, and I am going to open my box up. Give me just a moment. Okay. Okay, very common first question. What is the time frame to get my account up and running? Typically, we do ask for 4 to 6 weeks, and that's from the time the original paperwork is received at our corporate office. It is often much quicker than that, but there are some things that we cannot control. During this setup time frame, we will coordinate the transfer of your assets from your current custodian to our custodian, and how quickly they move from your current custodian, we don't necessarily have control over. So we will work with you on that. We also create that LLC that I mentioned, and then during this whole process, we keep you informed via email. So once the funding of your new account is complete, we send you a confirmation email, and then we also send you a binder that has copies of all your account documents and instructions for making future contributions and for funding transactions. So we ask for 4 to 6 weeks. We often can do it more quickly than that. It kind of depends on the complexity of your current accounts, how many are coming, if you're doing conversions in the process, etc. If you know that you want to open an account and you are already actively looking at investments, please don't delay in getting your paperwork started. We want to be able to next day fund your transaction. Once your account is set up, then you have that same day or next day funding of your investment. So we want to be able to offer that to you quickly. Okay. Can I use my IRA funds to make an investment with my spouse? Generally, typically, no would be the answer, because your spouse is a disqualified person to your retirement account. However, if the transaction is structured properly, you can invest with prohibited parties, which would include your spouse, at the inception of the transaction. That's what I was mentioning when I showed you that schematic. What we encourage you to do is to call us and discuss that kind of a transaction with our client services department in the early stages, so that we can make sure that you have all the information you need, just to make sure you're not heading down the road to a prohibited transaction. So generally no, but if it's structured properly, yes, is the answer to that. Okay, if you have a rental property in your account, who does the renter send their rent check to? Well, that really depends on if you're using a property manager or not. We do highly recommend property managers. Typically, when you're using a property manager, the property manager will collect a rent. The checks are made payable to them, and then they forward to your IRA LLC with us the excess funds. So in other words, they will take out their percentage for managing the property, and then whatever remains they will send to us, and that will go into your retirement fund account. If you're not using a property manager, then the checks would be made payable to your IRA LLC. So let's say that's Retirement Investments Galore LLC, and they would send the check. They could send the check directly to us. They could send the check to you, but then you'd have to turn around and send it to us because we have to deposit it into that bank account that your LLC has access to. So it'd just be quicker for them to send it directly to us. Either way, once we have that, you will receive an email when those funds have been received and posted to your account. And you can go online and look up that, excuse me, it looks like I have a disconnect here. Okay, you can look up and see if that has been posted on your cash flow statement. I apologize, my window just blanked out. Okay, there we go, we're okay. Let's see, if I want to put IRA money into a self-managed stock brokerage account, can I? Yes, actually you can. This is a self-directed retirement account, so you can be managing, you know, have a stock brokerage account inside of it. Now, and you can be the person who actively trades those monies inside that stock brokerage account. Now, a couple of things about that. You can open that with any company that you choose. The account should be opened as a business account, and it does need to be opened in the name of your IRA LLC. Again, Golden Retirement Investments LLC, whatever you have chosen for the name of your LLC, that's the name that needs to be on that brokerage account. And what we will ask you to do is send us copies of your monthly statements for that brokerage account, because we will need to be sure that you haven't made any deposits or taken any withdrawals out of that account personally, because that would not be allowed. That would be taking money out of your retirement account or putting money into your retirement account. And you can't do that directly into that stock brokerage account. But absolutely, we have folks who move money to us and they are looking for the investment. They're getting their structure together, etc. And while that money is sitting there, they want to be actively trading it in something. So they will open a stock brokerage account, move some of their money into that, trade, then they find the investment they want, liquidate those stocks or whatever they are, mutual funds, move the money back out into their LLC, and now they're ready to fund this investment that they put together. So yes, absolutely, you can do that. Okay, this looks like two questions in one. A traditional IRA requires the owner to begin withdrawals at age 70. Yes, that's true. In the year that you attain age 70 and a half, you must begin taking RMDs, required minimum distributions, from a traditional IRA. And then the question is, if one owns real estate in their account, is it required to sell it at some point in time? And I'm assuming they mean in order to take that RMD. No, actually, you don't have to do that. What you can do, let's say you own a property in your retirement account and you're required to take a minimum distribution of $10,000. Let's pick a random amount. And you don't want to liquidate the property, but that's the only asset you have, or you have insufficient cash and you can't make a contribution. You know, this is what you've got in there. What you can do is we can have an appraisal done of the property. So we have a current market value, and then you can take a partial distribution of the value of that property. So let's say your property was valued at $150,000, and you're required to take a minimum distribution of $10,000. What you can do is have the property is now appraised at $150,000. So what would happen is we would distribute $10,000 worth of the value of that property to you personally. So now the property is going to be retitled, and it will be retitled in a percentage ownership. You will own $10,000 divided by $150,000 percentage of that property, and your retirement account will own the remainder. And the title will now be in both of your names, showing those percentages of ownership. So you can do that, and you know, it just requires those steps to be done. Then what would happen is if that property was earning income, the income would be distributed to you personally and your retirement account in your proportion of ownership. So whatever proportion you owned would be the proportion that you would receive of the retirement income. Expenses would also need to be paid in that same manner. Okay, let's see. Looking through a couple of these I did answer during the webinar. Okay, I'll take this one last question and then we'll close. Does STC choose the terms of my loans? So I'm assuming that the caller is planning to make a loan from their IRA account to someone and asking if we direct what the terms of the loan are. And the answer would be no, we don't. This is true self-direction. You are in control here, so you will choose the terms of your loans. What we will do is we will review those loan documents, and we will make you aware if any of the terms might raise a red flag in an IRS audit. Keep in mind that you know, the goal with your retirement account investments is to make money for your retirement account. So let's say, as an example, you're loaning funds for 5 years at 1% interest. The IRS would wonder why you are making a loan at such a low rate when nobody can get a rate that good from any other type of lender. We won't tell you you need to change it, but we will inform you that, you know, using those kinds of terms may be placing your IRA at risk. So you would need to sign off on a document that you're aware of that. So, okay, those are all the questions that I see at the moment. If more questions do come to your mind, please do get in touch with me directly or with our corporate office. We would be very happy to help you and assist you and answer any questions you have. Let us know how we can be of service. Thank you so much for joining me this evening. Please do join us on our next educational webinar. Good night.